So I was in the morning meeting this morning with the company, and we were talking about sports teams and the trade deadline that just hit for the NBA. And you're watching NBA teams trade players. They're trading players for future picks, and they're trying to set up the perfect storm for later on, where they'll be well capitalized and funded. Well, they'll have money. So, and then they have good first round picks where they can pay out contracts. Then they have some key players that they can build around. And a lot of times this takes 5, 6, 7 years in the making to get that perfect storm where all the stars align and you can draft that team that actually has a chance to go the distance. And I find it intriguing. It's fun to watch, especially when you have a team that you follow yourself. Very, very similar to gold. You have people watching gold for 40 or 50 years. So I think it's a cool analogy to make. We have the perfect storm for gold right now to have a really good bull run in price. And the writing's on the wall. I mean, it's everywhere. People are analyzing gold left and right. Everyone's saying the same thing. The prices are going to go up. Here's a couple key things that make up that perfect storm. The central banks are buying a tremendous amount of gold. They buy big. They're taking available supply off the market. Also, they have some foresight. There's a reason that they're doing that. It's not just take the supply off the market, drive the price up. It's what are you going to need that gold for later on? What's going to happen with other currencies? Because gold competes with the dollar. Gold and the dollar are both monies, both of them non-interest bearing assets. And this is the second reason. People have been in the dollar the past year because it's getting paid out at 4.5% or 5%. That's very high, but that's going to stop because when interest rates are so high, people consume a lot less. Companies have slow economic activity. They have to start laying people off, and it runs us into a recession. And the only way to get people spending again is to lower the interest rates, make the cost of money cheap. And when the rates go back down, people are going to move over into gold. Also, when there's slow economic activity, which is coming, like you're going to see it this year, because of these high rates, lower stock prices. People leave the stock market. Where do they go? They go to gold. These are tried and true reasons to buy gold for 100 plus years. The third thing, higher oil prices leads to higher gold prices. Why? You don't just feel the difference in the price of oil at the gas pump. You got to understand that any company that makes anything is usually using oil to produce it, or at least to transport it, to get it from where it is to where it has to go. So those input costs are higher, which lead to companies earning less money. Companies earning less money leads to lower stock prices, flight over to gold. But also, mining gold is extremely labor and resource intensive, specifically oil. So if the oil prices are high, $79 a barrel, 50% higher than their average over the past few years, then you need to charge more for the gold coming out of the ground, or it doesn't make it worth it to mine it. So these high oil prices, which will probably go back up, but right now 79 a barrel as of yesterday is still high, higher gold prices. These aren't just small reasons. These are like the key fundamental drivers of the price of gold, all happening at the same time. Like that perfect sports team who has key players to build around, well capitalized with money to pay out contracts, and first round draft picks. It takes a long time for the stars to align in the situation to set up, and we have that for gold. Why does this matter? This isn't a sports team that you're in love with. This is the money that you've earned for your whole life, where you traded your time, which you can't get any more of, for dollars, and those dollars are eroding to inflation. I have some money parked in a money market right now making me 4.5%. Inflation is 7%. My money is eroding. I'm hoping inflation comes down quick enough, because the expectation for inflation is that it'll drop, but in the meantime, the money is eroding. I just can't put it in the market because the market's going to crack too. And real estate prices are going to crack also. So I'm just kind of sitting here. You know where I'm heavy? In gold, because gold has tremendous tailwinds when nothing else does. And you don't want to spend the rest of your life watching the money you earn sit in a bank account and just erode away to nothing with the increase in prices of everything. Usually you see inflation in real estate prices, in asset prices. When you see it at the grocery store, right? A carton of eggs in Chicago and Las Vegas is $8. you're going to see a $10 loaf of bread somewhere in this country this year. That means that your dollars have a lot less purchasing power, and that's so bad. Move some money in gold. You have to play this game. It's not a game you play for fun. It's a game you play just to preserve the money you've earned, not to make big returns. I just want to preserve the wealth that I've earned. But if I can get a big push and make 30-40% because I'm invested at the perfect time, perfect storm, I'm going to do it. There is low downside risk, little to none, with right now the biggest upside for gold that we've seen in 50 years. And this is coming not just from me, it's coming from the experts. The writing is on the wall. Get a gold position, call me, ask me what I have. I can do something for you personally. I've been collecting gold at low prices for a long, long time. So I can help you get invested. Give me a call. And if nothing else, I hope you enjoyed the video. Thanks.